Today, I'm thrilled to be welcoming into the No Holds Bar Roger Montgomery, founder and chairman of Montgomery Investment Management. Welcome, Roger.
Great to be with you, Adam. Thanks for having me on the show.
Now, Roger, it is a tradition here in the No Holds Bar that we start each episode by offering you a drink from our very well
Mm.
stocked bar here. Our signature cocktail, we have one each week. This week is a simple whiskey neat with a JP Morgan chaser. I'm not entirely sure what's in the JP Morgan chaser, by the way. What could we get for you? What's your poison, Roger?
I'll have a Negroni, thanks.
A Negroni,
Mm.
lovely. Yeah, that's an Italian drink, if I'm not mistaken, isn't it?
It is, yes, it is.
Have you spent much time in Italy?
About to.
About to.
Mm.
Lovely. Very
Yeah,
good. All
yeah.
right. Excellent. Hey, lots to get through today. Some really interesting stocks here that I'm looking forward to getting stuck into. So why don't we kick things off? And we're going to start by heading off the beaten track, looking at ARB Corporation Limited, ASX ARB, currently trading at $38.12. Roger, I'm a four-wheel drive owner. I use
Me
it.
too.
I use it for picking up the kids from school mostly.
Yes.
Uh,
Oh, fantastic. It's always a
oh,
dangerous journey.
absolutely. It can get hectic, that's for sure. We're looking at ARB Corporation, though, makers of four-wheel drive parts. Is this a buy or a sell for you?
Oh, it's definitely a buy,
Right.
um, and that's because um, the market still treats the company with, I guess, some skepticism
Yep.
because of its exposure to the macroeconomic environment here in Australia. And so, consequently, people are, I guess, underestimating or undervaluing uh, its future growth and where that growth is going to come from. It's definitely a pro-cyclical business here in Australia. And what I mean by that is, when the economy does well,
Mm,
it does well. When people are flush with cash, they go out and spend it on tricking out their four-wheel drives.
right.
And when the economy is not going well, they tighten the reins a little bit or zip
Yeah.
up their wallets. But really, the growth driver for this business is less Australia, where it's mature, arguably, although there's the opportunity to open up a number of new stores.
Mm,
But its real growth potential is overseas, particularly in the United States. It's leveraging its reputation over there, and it's also signing deals with OEMs or original equipment manufacturers.
yep.
And the biggest four-wheel drive sellers in the United States are Toyota and Ford,
Right.
uh, and um, and it's signed OEM agreements with them. So if you head into a dealership to buy a new Ford SUV or utility vehicle
Yeah.
or a Toyota, then the dealer is going to offer you options to spec that car the
Right.
way
Yep.
you want it, to individualize it.
Yep.
Um, ARB is going to be supplying those items uh, as um, as you spec that out in the dealership.
Yeah.
So, for
Right.
all intents and purposes, the dealers are selling the equipment for ARB.
Right. And does it, so breaking into the US market, it's got
Yeah,
that Aussie kind of outback kudos that goes with it, that it's got the reputation. Is it more favorable being from Australia than, say, from China, for example?
definitely.
Yeah.
And in fact, in some markets, Thailand, for example, they sell fake ARB product with ARB stickers, fake ARB stickers on it. That tells you,
Right. Oh, well.
and they're not safe.
Yeah.
They're not safe. They're not fit for purpose, and as a consequence, people are
Mm,
looking for the original product. But that just tells you how reputable they are.
yeah. All right.
Mm.
ARB is a buy. Next up, we're looking at Alliance Aviation Services Limited, ASX AQZ, currently $3.14. And Roger, Alliance has successfully renewed a 3-year contract with Glencore Coal. I wouldn't have thought that mid-sized passenger aircraft was a great option for transporting coal. Uh,
It's not very funny. Yeah, yeah,
Especially with those baggage
they're
limits. Once you start filling your bags up with coal, Roger, it's
cheaper than a diesel train engine. So, they just fly them really low along the train lines.
Alliance Airlines. Is this a buy or a sell for you?
Well, anyone who's been following me over the decades knows
Mm,
that I don't like airlines, but this is
right.
quite a different business.
Yep.
This is arguably an aviation infrastructure company. So what it does, it provides its fleet of planes under wet lease agreements to airline operators.
Right.
So it provides the planes, the staff, and it receives a fee for doing that.
Yeah.
And they're called wet leasing agreements.
Right.
It's been very, very clever at buying its planes at various times when the sellers or the vendors are distressed. So it generates, as a consequence of having non-unionised staff, for example,
Yeah.
it's very cost efficient. So it's been generating very high rates of return on invested capital. And if we say that this business, which is by the way now just entering, it's got some planes now entering service with under a 7-year agreement with Qantas. We think that they're going to double their profits,
Yeah. Right.
and if they continue to generate 30% returns on equity, if we assume 5 times something called their EBITDA, which is earnings before interest, tax, depreciation, and amortization,
Yeah.
5 times FY25's EBITDA, we think they're worth about $7, and they're currently trading significantly less than that, about $3.10.
Okay. All right. Alliance Aviation is a buy.
Mm.
Next, we're going to look at Megaport Limited, ASX MP1, currently $14.70. Isn't Megaport the guy that Optimus Prime fights in Transformers?
Is that Mega? That's Mega
Me-
something, but I don't know if it's Megaport.
Megatron, sorry, not Megaport.
Megatron, yeah, that's
Megatron.
Megatron, not Megaport. That's right. No,
Takes me
and
back. I watched Transformers as a
yeah,
kid.
and this company hasn't transformed as much as Megatron.
All right.
It's been building out what it does very, very successfully.
Yeah.
To put this in context for people, let's say you're a global enterprise. You're a big accounting firm. You've got
Yeah.
offices in Hong Kong and Sydney and in Europe as well. You want the data that everyone's uploading from their offices to be relatively close,
Mm.
or very close to data centers. And the reason why you want to be close is so you have low latency. You don't have much lag. You can work seamlessly with your
Yeah. Yeah.
information that you're uploading to the cloud. The problem is that your office in Sydney is nowhere near your office in London, and so
Mm.
they're using different data centers. How do you make those data centers talk to each other seamlessly? How do you link them? Because the data center provider here in Australia doesn't talk to the data center that or provider you're using in Europe,
Yeah.
uh,
Right.
and so consequently, they need to talk. They need software, and there needs to be software and infrastructure, so
Mm.
that when you're talking to your colleague overseas, you're both accessing a different data center, but it looks like you're accessing the same one seamlessly.
Right.
And so that's what Megaport does. They're Switzerland, if you like, in the world of competitive data center providing.
Right. Okay.
Um, so incredibly capital light, hugely scalable.
Yeah.
It's arguable that the market sort of underestimated their growth potential, and they're free cash flow positive. They're on their way to $500 million in sales, which
Yeah.
if
Right.
they achieve their 40% margins, they're worth potentially $20, maybe more than $20, and they're trading at less than 15 at the moment. So, we think that's another business
Mm.
that, there aren't many businesses in Australia where you can access both the cloud thematic,
Yeah.
and enterprise moving to cloud, as well as the AI
Mm.
theme.
Yeah.
This
Right.
is one of them. We'll talk about another one soon, I'm sure, but this is one of them.
I'd love to know how AI comes into network traffic and network routing. Like,
Well,
is that?
you're going to
I'm
be
conscious of time, but
yeah, yeah. Okay, well, I'll be very brief.
yeah. Yeah.
If you've got a copilot, an AI
Mm.
copilot sitting next to you at your computer on your desk,
Yeah.
and it's constantly telling you that you could write a better joke, for example, Adam, or you
Oh,
could
I don't think that's
you,
possible, Roger. I'm not. AI is
or
very clever, but I'm not sure
or you
it's up to it.
or you're blasting off an email, and
Yeah.
and the AI says, "Hey Adam, you know what? You've written this email before. You've
Mm.
done a better job of it before.
Yeah.
Let me suggest 3 options that you can select." So in order to be able to achieve that, it's accessing the cloud
Yeah. Yeah.
much more frequently than you were before.
Yeah.
And
Okay.
so that it's very dense, the amount of data that's required,
Right.
and so that will allow data centers
Yeah.
potentially to charge more
Yeah.
for the usage of their data centers.
Gotcha. All right. Megaport is a buy and is not a transformer. Next up, we're looking at Scali Limited, ASX NCK, currently $14.85. And Scali is expanding into the UK. Didn't work out so well for Bunnings, well documented.
Mm,
But if there's one thing I know about the British, and I don't want to stereotype here, they love their furniture.
Yes.
bang up for a settee. So, Roger, Nick Scali, how we
In the
looking? How
good
was he
room.
in good? In exactly right.
Yeah, in the good room.
Cup of tea on the settee.
Yeah.
Uh, Roger, Nick
So
Scali, buy or sell?
So another buy.
Mm,
Look, I'm Adam. I'll say now. I'm bullish on markets, equities for the next year and a half.
right. Okay.
I think out to 2026 markets are going to go well. So
Yep.
all of my suggestions today will be buys,
Right. Okay.
because I really do think. Really backing myself here, and I've been saying for about a year and a half that I think markets are going to go well. They
Yep.
have done so far, and I think they'll continue to go well. In fact, I think how well they go accelerates. So this is another buy. Here's an interesting fact about Nick Scali.
Mm,
Um, they were the furniture retailer in Australia that introduced the idea that you don't get the couch on the floor. You look at it, you sit on it on the shop floor,
mm.
but then you have to wait 3 months before you get it. You have to pay for it now, pay a deposit now.
I've been
Uh,
through that. Yeah, I didn't
yeah,
enjoy that process.
no, it was a bit of a shock when it was introduced back in
Yeah.
the 90s, in the
Yeah.
early 90s or mid 90s.
Mm,
But it was the Scali family that introduced that idea. Now,
right.
what's great about that idea is they don't have to have any stock. They don't
Yeah.
have to
Right.
have warehouses full of that particular couch in that particular color
Hmm.
because Adam might turn up and buy it tomorrow.
Yeah.
Um, you pay for it now, and we'll deliver it just in time.
Mm,
And so they've got incredibly. Oh, they've proven, by the way, in the last reporting season, they proved to have very, very resilient earnings. And the tailwind behind them
yeah.
is migration, because migration
Right.
leads to home formation.
Yep.
Home formation leads to furniture purchases.
Yeah.
And they
Okay.
also acquired Plush, and they've delivered on synergies ahead of expectations. So they're generating about a 32% return on equity.
Yep.
They continue to pay out about 70% of that as a dividend. We reckon they're worth over $18. I reckon they're worth over $18 a share. They're trading under 15 at the moment.
Yeah. Okay.
Mm.
Nick Scali's about a couch on demand. I'm excited. Next will
Yeah,
be couch as a service. Do you think we'll get to that point?
yeah, yeah. So couch as a
Subscription
service.
couches. Yeah.
No, that's right. And if you don't pay, they come in and just hook it out from under you. Hey, I'm still watching. I'm still watching Netflix. No,
Yeah,
sorry,
no,
it's got to
sorry.
go. Yeah,
Very good. All right. Next up, we are looking at you. You gave me a list of stocks, Roger, and on the list was Commonwealth. And I'm assuming we're talking about the bank here. We're not looking
yeah,
to
that's right.
short the royal family, are we?
No, no. Although some people would happily take that bet.
Yeah, Commonwealth
I'm not
Bank,
one of those people, but yeah, Commonwealth Bank. Um,
CBA, $117.54. So you said everything's a buy. This is a buy.
yeah, look, they've had a very good run. What I've done is I've just done some analysis and put it up on our blog
Mm,
of the performance of all the banks in their they're announcing their recent half year results. And the Commonwealth Bank has shined again shone again rather, as producing. It's got the highest asset base. It's
yep.
about 30% higher than the other banks. Um, it is uh, despite having the biggest asset base, it generates the highest net interest return on those assets, and also this half it generated the highest return on assets from its other income. So think things like trading, wealth management, insurance, and that sort of stuff.
Right.
Um, Despite being the biggest, it's also the most efficient in terms of its costs, and that's resulted in the highest pre-tax and highest after-tax return on assets. So it remains the highest quality bank
Yeah.
in Australia. It's a bit of a big, lumbering, mature business, but the reality is, if you live on an island,
Mm.
it helps to own a bank.
Is that unusual that the biggest is also the most efficient? Normally,
It is. It
right.
is. Yeah. Normally you'd expect I mean, they're all very similar,
Mm,
in terms they all sit within a band
yeah.
that's relatively narrow, but the Commonwealth Bank is consistently producing the best numbers.
Mm,
And so if you're looking for, a relatively safe place to park equity capital
yep.
in a business that will continue to grow, remember
Mm,
the population is growing,
yep.
and so more people are going to require banking services, and some of those people who've migrated to Australia will be successful business owners, and some of
Yeah.
them will turn out to be billionaires.
Yep.
And who they bank with
Yep.
will ultimately help to generate returns for the bank that they go with.
And others might just need a loan for a new couch from Nick Scali. So we'll see.
Yeah, correct.
All right, let's take a break here. Grab another Negroni. Hey, if you've got a stock you want to hear about on the show, let me know. Use the contact form at equitymates.com, or you can leave a voice message, and you might even hear yourself on the show. Or flick me an email, contact@equitymates.com. We'll be right back after these short messages. Welcome back. You're listening to Buy or Sell, coming to you from the No Holds Bar. My expert today is Roger Montgomery, founder and chairman of Montgomery Investment Management. And we have another 5 stocks to get through here. So let's get cracking. Starting off with Adobe, NASDAQ, ADBE, currently $482.29 US, I believe that is. The inventors of the humble PDF document, to my knowledge. Nobody in the history of the internet has ever paid for Adobe Acrobat, though, as far as I'm aware. So, Roger, buy or a sell for Adobe? I believe that they've branched out from PDF documents since
Oh
since
yeah, no,
they invented
that's
those.
that's not been a major. It's changed the world for the
It
better.
has,
There's
yeah,
no
yeah,
doubt about that. So Adobe are known for their creative suite software.
yep,
So think Illustrator, Photoshop. They still, despite the fact that they dominate in terms of market share, they are still underpenetrated in many geographies, and in some countries they don't exist or people don't even know about them.
right,
So they've got a digital creative business, and they've also got a digital marketing business. The creative software piece, the software as a service, which you access through the cloud,
yep,
that's about 70% of their revenue. And despite the fact that their revenue is in the billions and billions and billions and
mm,
billions of dollars, their market, their opportunity is 10 times bigger than that.
yeah, wow,
Their total addressable market. Now, here's the interesting thing: they're still growing their earnings at roughly 20 to 25% per annum,
oh wow,
despite being a giant. They're growing their revenue in the mid teens.
yeah,
They're generating a 25 to 35% return on equity,
mm,
despite being huge. And prior to their most recent acquisition, they had very little debt. And so this is a business of stupendous quality, massive size, but still a very long runway for growth ahead of them. And
mm,
when they switched back in, I think it might have been 2011, they started switching their business over to recurring.
yep.
95% of their revenue is recurring revenue.
Right. And are we worried about AI for Adobe? Like they could either
No,
go two ways, right? They can either fully embrace it and just maximize it and monetize it, I guess, or it could eat into their market share with
no,
DALI and
they're embracing it,
yeah,
and in fact, they've incorporated AI into their creative suite of software products.
yeah,
So, for example, in Photoshop, where once you might have said, "Okay, I want to remove Adam from the bar background that I've got there,
yep.
and I just want the bar, and I just want to be able to access the drinks."
I get that a lot.
Yeah, just get out of the way, get Adam out of the way. There was a lot of work that I would have had to have done
Yeah,
as
yeah,
a designer
yep,
to remove you and fill in the background and put in the. I
yeah,
can now press a button essentially and
yeah,
ask AI to do that for me,
yeah,
it's saving time, so it's making users of the software more productive,
yep,
and therefore it's entrenching that software in their workflow.
yep. All right. Adobe is a buy. Moving on, we're looking at Novo Nordisk, CPH Novo B, which is CPH is Switzerland. No, Switzerland, is that right?
It's
Uh,
a Denmark-based
Denmark,
company.
sorry, yep.
Yeah, in fact, here's an interesting fact.
Okay.
Its market cap is higher than Denmark's GDP.
Is that right?
Yeah,
Yeah,
it
wow.
is. Yeah.
Currently trading at 883.2 krona. One of the first with the breakthrough obesity medications. But now I'm hearing there are copycat, cheaper alternatives popping up. Roger, are we worried about the threat from the reject shop once they start pushing out these cheaper weight loss medications?
Understand that this is a business that has its roots in those GLP-1 medications that
Yeah.
you're describing, like Ozempic, which are originally designed for diabetic. They found, as a consequence of applying it, that there was some other health benefits, including weight loss,
Yep.
reduction in cardiac disease, and so on. And so, it's a massive market itself. And I've got some stats here.
Okay.
Um, there's about 600 million people in the world that suffer from diabetes,
Hmm.
but there's about 800 to a billion people in the world who suffer from obesity.
Right.
Um, Fewer than 15% of diabetics have access to this drug at the moment.
Yeah.
So
Wow.
you can see that there's an opportunity to penetrate that market irrespective of what happens. I mean, the share prices run up obviously because of the thematic around weight loss,
Hmm.
and I think over time the additional health benefits, not so much weight loss, but lower cardiac disease and so on, we'll see a lot of regulators start to support it, a lot of governments start to subsidise it,
Yeah. Yep.
and that means that the growth opportunity for this company is significantly greater than even than arguably even the fad that is its the fashionability of its
Mm.
weight loss credentials at the moment.
Yeah. Okay.
Sorry, I did forget. Yeah, I should add
Mm.
they're growing at 50% a year at the
Right. Yeah,
moment.
that helps. Yeah. Yeah.
And they've got about 40, depending on the time you look at them, 40 to 60%
Yeah.
market share, growing at 50%.
Yep.
This is a business that's got a long runway of growth ahead of it.
All right. Very good. So Novo Nordisk is a buy. Next, we're going to look at Sage Group, London Stock Exchange, SGE, currently £11.98. On their website, they list smart cities, defence, energy, resources, water, manufacturing, transport, and cybersecurity. It seems like they have everything in the whole world pretty much covered, Roger. Is Sage Group a buy or a sell?
Another one that we like a lot.
Right.
This is a business. This is a business that's owned in the Poland Global Growth Fund, which is a fund that we distribute here in Australia
Hmm.
on behalf of Poland. And this is a company that they've highlighted in their presentations as having enormous growth potential, not least of because it's exposed to all those industries that you mentioned.
Yeah.
But again, some really interesting stats. Oh, I should say, it's an accounting software, an HR management software business, a payroll software type business.
Right.
It's growing at a phenomenal rate of knots at double-digit rates. There are a few big businesses in Australia that are going to grow at 15 to 20% a year over
Mm.
the next 5, 10, 15 years. Overseas, you find a lot more of them, and Sage is one of those businesses. So it's growing its revenue at 10 to 12%, and it's growing its EBIT, or its earnings before interest and tax, at
Yep.
between 15 and 20% per year,
Yeah. Wow.
despite already commanding significant market share. Um, they're trading at about 28 times free cash flow, but because that free cash flow is actually growing so quickly,
Mm.
they'll grow into that PE multiple relatively quickly as well.
Right. So they make software products. Are they products that we would have heard of? Are they? Is the product called Sage something, or is it
It's a Sage suite,
Sage
so it's
Suite?
a
Right.
suite.
Okay.
You'd need to be an enterprise really,
Yeah.
or a
Right.
medium sized business and up,
Yep.
to be wanting to use their software.
Yeah. Okay.
It's all recurring.
Right.
It's all payroll. As I said earlier, payroll, accounting,
Yeah.
workflow software used by all those industries that you mentioned right in
Right.
your introduction.
Yep. Okay. Very good.
And
Yep.
like Adobe, another business with 95% recurring revenue,
Right. Brilliant.
significantly recurring. And why is that interesting? It's interesting because once you put this software into your business,
Mm.
once you've put these workflows into your business, they become entrenched,
Yep.
and the renewal is automated.
Yeah. Yeah.
So there's a lot of inertia.
Mm.
Uh, that you're going to be using that software for a long time. You're going to build your business around that software,
Yeah.
so it becomes entrenched, and
Becomes
that
very
recurring
expensive
revenue
to
is long.
get to move away to a different platform, right? Like it.
Indeed, yeah,
Yeah.
yeah,
Yeah.
that's right. The switching costs are very, very
Yeah. Yep.
high.
Yep.
Mm.
Yeah. Makes sense. All right. Sage Group is a buy. Next, we're looking at Telix Pharmaceuticals Limited, ASX TLX, currently $15.49. I Googled this one, Roger, and
Yes,
the top question people ask on Google about Telix Pharma is Telix Pharmaceuticals legit?
yes, it
So,
is. Absolutely.
absolutely. Follow up
Yeah.
question: is it a buy or sell, Roger?
And another one that we definitely have in the portfolio and
Yeah.
like,
Yep.
and we think that the market's sort of underestimating their growth, and that's because. So let's take a step back. What do they
Okay.
do? They create, if you like, devices which are biological,
Hmm.
and they attach. It's a radio labeling product. and it's injected into your body to help identify whether you've got prostate cancer or not.
Oh
So
wow. Okay.
think of it as a protein that then seeks out and identifies, and in combination with CT scanning,
Yep.
it creates an image,
Yep.
and it attaches to cancer cells.
Oh wow.
Um, it's gone from went from zero revenue back in March 22 to
Yeah.
$100 million in March 23, 115 million June 23, and then 140 million of revenue in December. So they're on target
Wow.
for about 445 million US dollars, or $450 million of revenue in FY24. And they're growing substantially. The potential for them, or the optionality for them,
Mm.
is that technology is not only used to identify cancer, but the technology is then used to deliver a treatment
Yeah.
for
Right.
that cancer, because it's like a heat-seeking missile in the body that identifies and attaches itself
Yeah.
to cancer cells. Then you can potentially deliver a lot of other things
Yeah.
to
Right.
those cancer cells. Now they're also, and at the moment the concentration, or the revenue has been prostate cancer,
Yep.
but they want to move into identification of kidney cancer and also brain cancer. And potentially deliver treatments for those as well. So they are huge potential
Mm.
markets, but again, represent optionality at the moment. But just on its growth rates at the moment, it
Yep.
still looks reasonably priced.
Yeah. Okay. All right. Next up, we're going to look at Macquarie Technology. Oh, this is our last call here in the No Holds Bar. Macquarie Technology Group. Macquarie Bank, often referred to as the Millionaires Factory. Macquarie Technology Group. Is this the Millionaires Data Center, Roger? Is that how?
I think all data centers are, aren't they? I mean, for anyone that owns them,
Yeah.
you're in the sweet spot right now, aren't you? Because
Yeah. Yeah.
as I mentioned earlier when we were talking briefly about Megaport,
Yep.
this is a business that is capturing some of the upside from the AI and cloud migration
Yep.
tailwinds. So this is a business that is, I think, relatively easy to understand. It develops, builds out, and then operates data centers,
Yep.
and they're all the major site is the major development opportunity or growth opportunity is in Macquarie Centre, or Macquarie Park
Mm-hmm.
in Sydney, which is near Epping. Anyone who's in Sydney knows Macquarie Centre,
Yep.
on the sort of north, the North Shore. Sorry, their data centres are located there.
Yep.
Now their IC3 West, which is being built out at the moment, that's going to have the effect of significantly increasing their capacity, and it's also going to significantly increase profits, potentially doubling profits.
Yeah.
This is a business based on current metrics, based on what we know they're going to earn, and they've got a very, very strong reputation, particularly in government
Right.
in Australia. Based on what we know that they're going to earn when they build out that centre, the business is worth perhaps $115 a share. And depending
Yeah.
on the
Wow.
discount rate you use,
Yep.
maybe worth a little bit more than that. Currently trading about $91 a share or thereabouts. The Montgomery Small Companies Fund actually bought. This is a day one stock from the inception of the fund, so it bought at a
Yeah. Right.
lot lower prices.
Yep.
Still think it's worth more than where it's trading today. And the upside scenario is that they fully tenant their data centers.
Yep.
It starts throwing off very reliable rent-like income
Yeah. Right.
at attractive rates, and that would be very attractive potentially for a super fund or a pension fund.
Yep.
They could pay, who knows, potentially $180 a share,
Yep.
and still give their holders in their pension funds, a very good return, in the low to mid single digits
Yeah.
from
Great.
that rental income.
Right. So yeah. Okay. And who are the big competitors for like a
Well, Next DC is an
XDC?
obvious
Yeah.
one,
Yep.
you know. But then these guys, their clients, as I mentioned earlier, the majority of government departments, over ninety
Yeah. Yep.
percent of government departments are tenants there, and so are the big hyperscalers like your
Mm.
Facebook, or your Meta,
Yep.
Amazon Web Services, Google. Those guys,
Yeah.
they're what we call hyperscalers. Not
Yep.
all of them are clients of Megaport.
Mm.
Macquarie Technology,
Yep.
but a lot of them are.
Yeah. And it's a good reminder that the cloud doesn't actually exist up in the sky anywhere. Like I
No,
think.
the cloud isn't in the sky. No, that's right. The cloud is in a data center on the
Yeah.
ground.
Yeah.
Um, and as we talked earlier about how AI is going to increase
Mm.
the density of usage, if you like, or the
Yep.
frequency of usage, how many times your computer or an enterprise's computers access the cloud.
Yeah.
You're talking about an exponential increase,
Yep.
and that is going to that's going to ramp up faster than these data centers can ramp up.
Yeah.
And so, obviously, if demand is greater than supply, price goes up.
Yeah.
So they'll be able to raise prices and generate more revenue.
All right. Macquarie Technology Group is a buy. That's it, Roger. Roger Montgomery from Montgomery Investment Management. Thank you so much for joining me in the No Holds Bar.
A pleasure, Adam.
Where can people
Thanks for
find
the
you?
drink.
Yeah, no worries at all. You're welcome. We'll have another one soon. Where can people find you, Roger, if they'd like to hear more from you?
If they want to hear about these companies and
Yep.
what we're writing about these companies, they can go to rogermontgomery.com,
Yep.
and we're uploading 1 to 2 blogs a day.
Wow. Okay.
There, we also upload a video, 1 or 2 videos a week.
Yep.
Um, if they're interested in any of the funds, and we've got small cap funds, large cap funds, we've got global small and mid cap funds and large cap funds
Yep.
as well as private credit, then they're available at montinvest.com.
Okay.
And then if they're interested, if they go to the blog or just Google my book, Valuable,
Mm-hmm.
they can learn to do a lot of the analysis themselves by buying a copy of
Oh,
that book.
brilliant. Something for everyone.
Indeed.
Awesome. Thank you so much for joining me once again. And thank you out there for joining us. Don't forget you can find us on YouTube as well. I hope you'll join me again next time when we jump back into the No Holds Bar for more buy or sell. But until then, it is bye for now.